update with Talisker Resources CEO Terry Harbort. Terry was with us earlier this year, but the company's had news releases since, so we're going to get an update. The format of today's sessions will be Q&A, so if you have questions, please put them into the Q&A box at the bottom of your screen. And thank you to those that emailed questions in. We've got those ready to go. And before we get started, as always, today's presentation will contain forward-looking statements. You can learn more about those in the presentation up on the company's website. And welcome, Terry. Thank you for joining us.
Magda, thanks very much. Real pleasure to be here again, and great to be talking about the progress here at Bralorne that we've continuing to achieve.
Awesome. So we're going to kick off with some questions on Bralorne.
Sure.
Can you tell us a little bit how development at site is progressing and when you expect to start hauling to the mill?
Yeah, Magda. Look, we're pretty pleased with the progress to date up at Bralorne. The mining contractor has completed all of the services installation, so that's the water, compressed air, electricity on time and as planned, so that's great. They're finalising the remaining rehabilitation and ventilation installation, so some vent bags, some ventilation fans as well to go in, and also some mining face ground support later on this week. So we're still expecting lateral development on the 1060 level that will start in March as planned, probably sometime throughout the course of next week. So pretty excited about that. Looking forward to hearing that first blast. Yeah, so that's
awesome.
all going pretty well. And I think you asked me as well when we expect to haul to the mill, did you?
Yes,
yeah,
I did.
So the mining we're doing at this early rate, that'll feed our underground stockpile and our surface ore transfer pile. So we want to build that up for a bit. So we've got a contingency as we're loading the trucks. And we're looking to begin transporting material as planned sometime in late April, early May. Hopefully a bit before. We'll see how things go.
Got it. So the material hauled, would it be from stopes, from mineralization development, or kind of like a mix of both as you get going?
Initially, it'll be from the 1060 and 1175 levels. So that's lateral or in-ore development. So in long hole, we're developing along the veins themselves. So that'll be the material that'll get transported. As we move into stope development or mining up into the veins, then that'll be either a blend or specific ore material from the stopes.
Got it. Thank you. And what are the stope dimensions and mining methods in the 2025 mine plan?
So the stope dimensions that we'll have, they're 1.8 meters. And the vertical separation with them is about 25 meters. The mining method we're using is long hole and longitudinal retreat. So basically we develop along the veins themselves and then drill up into them and then mine it out and withdraw as we take the ore out.
Got it. Thank you. And can you speak to how you see development rates and production rates ramp up throughout 2025?
Okay, so we're taking a fairly conservative or slow approach, just to making sure we get everything running properly before we start going too fast. So walk before we can run. Our development rates start at about 6 meters per day, and they'll increase up to 12 meters per day by the time we get to Q3. The production rates include both lateral, so a long vein development, and also vein stoping. So that'll be about 11,000 tonnes in second quarter, and we'd ramp that up to about 14 to 15,000 tonnes in Q3 and Q4.
Got it. Thank you. And we've got some audience questions about ore sorting, so I'll touch on that now. So is the ore sorting to achieve a higher shipping grade likely to move forward? And if yes, what would be the timing on that?
Yeah, look, I'll just be clear to everybody at this stage. This was our first testing of technologies, and admittedly, it went very well, and we're pretty excited about it. And it certainly does have the potential to reduce the volume of non-mineralized or very low-grade material that we're loading and trucking. And because we're reducing that waste material, it will increase the grade. And we certainly have seen almost 100% increase in the grade. So it increases the value of that and decreases the cost simply because it has an impact on that. So I will say, though, this is our first test and we do have some more tests to do. We're very happy with it. It was a deposit-wide test. We took material from all over the project, and we'll be looking at more run-of-mine style material in the next test as a larger scale. But certainly the outcome was very good and has a lot of potential add-on impacts.
Okay, thank you, Terry. And what do you have an estimate of the CapEx for the sorting system, and when would you see it enter operation? What is roughly the return on investment?
Oh, Magda, look, we are sort of in the preliminary phases of this, so we don't have a detailed configuration or a detailed costing of this stage. But these laser system of this throughput generally cost around the $1 million mark. And then there's the auxiliary equipment that comes with it. So the crushers, conveyors, a sprung structural building to cover that, likely to be about another $1 million. Return on investment, I don't quite know what you mean. Do you mean payback there?
I'm not sure. This was a question that came in through email.
Okay, yeah, look, I can talk about the payback. Payback will be very quick. It'll likely save us in our current strategy to truck around about $100 a tonne. So that adds up pretty quickly. I think we talked about here of 1,100 tonnes in Q2. So that's $1 million savings in a quarter, which basically pays for the equipment. 2 quarters pays for itself. So we are pretty excited about the results, and we are looking to go quickly into the second phase and then make a decision. But certainly, if things continue along this pathway, yeah, it's a great option.
Got it. Thank you, Terry.
I must admit, Magda, often all sorting's oversold. So I was fairly skeptical about whether we were going to get results. So it was quite a surprise, a very positive surprise.
Awesome. Thank you. And with a sorting system, Talisker only needs 7 to 8 trucks per day for 100,000 ounce production. Should investors assume that the on-site mill would now be pushed out to later dates?
No, I wouldn't think so. Like the main impact that it have in this early stage is that it'd reduce the volume that we're sending out. I think we'd probably still look to transition to our own mill, but it'd have significant impacts on that. It'd reduce the size of the mill that'd be required. It'd reduce the energy cost for the total material that we are mining. So I don't think it would particularly push that out. I can't say. We'd have to look at the economics once we've confirmed that we're going to implement a system. Look at the economics and see how it compares to trucking. And of course, if we truck a lot less and it's worth a lot more, and we have to mill a lot less, it may be better than on-site milling. But at this stage, I can't tell.
Got it. Thank you. And another question about ore sorting just came in. With ore sorting, we would be leaving a low grade but usable, or I guess with ore sorting, would you be leaving a low grade potentially usable for a future mill material?
Yeah, perhaps. Again, preliminary study, so difficult to tell. That the tailings that came out of this study averaged about 0.6 of a gram per tonne. So at this stage, we'd likely be milling material. It'd be well below cutoff, that low grade material. but it might likely be stockpiled underground. The style of deposit that Bralorne is and the style of milling and plant that we'd have, I wouldn't expect that we'd process that, but who knows? Yeah.
Okay, thank you. And Terry, can you just give us an overview of what this technology would look like on site? Like, do you buy basically a machine? Would it need any permits? Yeah, just what?
Sure. Yeah. Look, it's well, if you like, I can talk about the testing that we've done and the machine that we'd likely use. So we tested two systems that are commonly used and very successful in gold vein deposits. XRT, which stands for X-ray transmission, that really classifies ore based on the atomic density. And a laser-based system which measures reflection absorption or even fluorescence of the laser light on crystal structures. XRT usually works the best in deposits where there's a large amount of sulfide and a strong association of that sulfide with gold values. And at Bralorne, although we have a sulfide gold association, we don't really have a great deal of sulfide. Certainly in our test, it wasn't enough to be able to significantly separate the rock. And to complicate our matters, we also have sulfide in our alteration sequence that sits outside of the veins. On the other hand, the laser system, which was very successful, it's often used to sort silica or quartz. The testing that we were able to do showed a mass reduction of sort of between 35 and 50%, which is very good, and a doubling of the grade because of that reduction, and high recovery, sort of 95 to 99%. So pretty good. So odds are we'll probably go with a laser unit. So the laser units are quite small. They're sort of 2 meters by 2 meters by 4 meters. Obviously, they require feeder conveyors and a crushing and screening unit. They can be 4 or 5 or 10 meters long, depending on how much material and how long you're transporting that material. Some locations have them deployed underground, which is quite innovative. Means you reduce the amount of waste that you take to surface. You don't have to bring it back in, and you can backfill that immediately. At this stage, of course, we're not really considering that, but it may be something that we do. And then you'd likely just have that housed in a sprung structure that's probably the size of a three-car garage. That's the sort of the scale of
Wow.
how they are. Yeah, it isn't big. They're quite small facilities. It's the conveyors really that take up the space, and stockpiles coming in, waste stockpiles and transport stockpiles. So they're the things that take up the space.
Okay, makes sense. Thank you. And we have one question about, I believe it's about toll milling. Are you able to provide any visibility on the deals with the milling facilities?
We aren't at this stage because they're all held under confidentiality with the groups. But obviously it'll be able to get worked out when we put out our results. But at this stage, yeah, they're all held under confidentiality.
Got it. Thank you. And are you considering doing an economic study in the near future? I see that there's a question asking about whether you're able to give quarterly production estimates. Would you be looking to do like a more formal economic study?
Yeah, look, I'll answer those as two separate answers, if you like. Simple answer is yes, we're investigating that right now. Our resource modelling team is doing a lot of work validating a lot of the historic exploration drift assays. So I think we've got about 24,000 or so that are in areas that were never developed or never stoped. So they're working very hard to validate that and model them into wireframes. We're hopeful a lot of that can come into an updated resource that would then, at this stage, we don't know what category that would pass into, but at least we want to pass that into a resource base. With that, we'd also look at formalising our mine plan, so taking our mine plan and adding that into an economic study and then releasing all that information. So we're having a look at how long it would take to validate all that historic activity. There's quite a significant amount of vein material there that sampled that we know very well, but we do just have to validate that and be able to bring that into modern compliancy. So once we have that, we'll have a fairly good indication of the time frame to look at an economic study, and then we'll start to build some of the work of our current mine plan and our current economics, being able to expand that to incorporate this addition and then build that into an economic study that we'd release. To answer the second part of your question, yes, all our production figures and costing will be in our quarterly and monthly reports and D&A, that sort of thing. The exchange doesn't allow us to put that out before we've done it, which is a bit crazy, but it's something we have to work around. But certainly, once we've mined it, we can put that out with all our costs.
Got it. Thank you, Terry. And go
sorry,
ahead.
Maggie. I think there was a question that I didn't answer about permitting relative to the
whether you would need any additional permits to deploy laser sorting. Is that the one you were referring to?
Yeah, sorry, I missed that one. So the simple answer to that is we have the permits we need. We need to amend those permits because there'd be some changes to our waste management plan and potentially some changes to that waste characterisation. So the team's having a look at that right now.
Okay, thank you. And just touching on the gold price, and I mean, you have a mine plan right now, and today the gold prices, I think we were just chatting before we started, broke record levels. How or has this sustained gold price impacted the plan that you're working towards right now?
Yeah, look, I can't say it has at this stage. There's a lot of chaos going on in the world, particularly with our southern neighbours. So we're still taking a cautious approach on what the gold price is likely to do. Unfortunately, in our industry, generally when gold prices track up, so do costs as we're going forward, and we have a bit of an unknowns about tariffs coming in, availability of products, increases in costs. So I think it's very prudent to take a conservative approach on how we build our economics relative to the project. So we're still using 2,300 here for this year, and in the long term, I know we're knocking on the door of 3,000 at the moment, and I think that's fantastic. But I'd rather have a range of fat there, $600 or $700, that can help us mitigate what may happen with inflationary impacts caused by all the tariffs, increased prices caused by the tariffs, challenges with accessing materials. I think it's much better to take a conservative approach and not get carried away with the high gold price. It may come down as quickly as it went up. I certainly hope it doesn't. It certainly looks like there's been some large-scale buying of bullion, particularly with our southern neighbours who've increased it nearly tenfold in the last quarter. So I'm hopeful gold will be well supported around the 3,000 mark and maybe continue beyond that. But we need to plan. We need to plan for not such a great time, and then if times are better, then things are very good.
Makes sense. Thank you, Terry. And drilling, do you have any drilling plan for 2025? When would it start and what would it target?
Yeah, Meg, we have a small amount of drilling, mostly from underground this year, and a little bit of surface drilling. It's absolutely nothing like what we've done before. It's just like I think about 600 meters underground and about 1,000 meters from surface. So considering the 165,000 meters we've done in the past, it's almost minuscule. We're looking at starting that relatively quickly. It's to support and convert some of our resources into indicated at the end of year 1 and some of the stopes in year 2. So it's a small amount of work, but it is critical work that we need to do. And we'll be kicking off that here within the next couple of months. So there will be some infill drill results coming out.
Thank you. And we've seen an increase in M&A activity. Are you able to comment on any strategic interest in Talisker?
Sure. Look, I can't really comment on any specifics. Of course, anyone who comes to kick tires or visit Bralorne from a strategic sense, we're all held under confidentiality. But what I can comment is that yeah, there's certainly been an increase in strategic activity. We've seen a few deals done in the market, many of them not great deals. We're not really in a situation where we're forced to do a not great deal. So we're happy to entertain and look for long-term partners, but really what we'd like to do is try and build value, whether that and particularly that value is through, at this stage, going into production, generating our own cash flow, growing the mine organically, and also being able to put capital or deploy capital back into resource growth and replacement of resource depletion. So we're always open to the fact if we have the right partner come along and they're willing to pay the right price, then we'd certainly welcome a partner to be able to accelerate the project and bring our production profile forward, increase our production rate, and make more cash flow. Whether we take a buyout, well, at this stage, I don't really think so. It's up to the rest of my shareholders. I don't think I'd support it. I think we can grow the company, particularly over the next year or two, a lot and build a lot of value relative to a lot of other companies that can't do that because they're not permitted or they don't have all the facilities that we have. So yeah, in summary, yeah, there has been an increase in strategic interest. We're always cautious about who and what partners we take on and what they provide to us, either from a financial or technical benefit, and what the implications of that are for the growth of and valuation of the company long term.
Okay, thank you. And audience questions just came in. As a conservative move, any consideration to pre-selling a modest percentage of future production?
Yeah, look, I've been asked this a bit, and the answer is yes. It's always something we consider. Hedging's always a challenging position because if the gold bugs are right and gold goes to 5,000, then we look stupid. But if the gold price crashes back to 1,800, we look like legends. So I think whoever asked that question had the right wording there, a percentage or a proportion of our production. So something that we're in discussions with about now. I think it's prudent to lock a small amount in at these good rates. It's a pretty chaotic world economically at this stage. And a lot of people who know a lot more about global economics than me appear to be quite frightened. So I'd say yes, it's certainly something we'd consider. I'm hopeful that the gold price will certainly sustain above 28, at least for this year. And there's some good general consensus. There's also a lot of people who think it's just going to keep running, and I'd love to see that. It's awful to see the global economy doing bad, and that equals us doing good. But yeah, I think it's a good time to be a gold miner, and perhaps it's a good chance to hedge some of that production just to give us some longer term security.
Okay, thank you. And there's a two-part audience question that just came in. For one, the ore sorter, are you able to estimate whether or how it would affect costs per ounce? And then the other part of it was, I don't know if you're able to give any detail about cost estimates right now for ounces coming out?
Yeah, look, I can answer the ore sorting part of it, certainly. It'd likely be a 40, well, I think if we look at the reduction in material, well, I suppose to properly answer that, it may not reduce the mining costs because we still have to mine the material before we can ore sort it. So it may not have any sort of impact there on that. However, it would probably have an impact on our milling costs, and in our current strategy, our transport costs. It'd have a lot of flow through effects or impacts on how we mine the deposit. So really, we'd be able to mine at a lower cutoff. We'd be able to mine veins that are narrower, that previously, when we dilute to our minimum mining width, that they mightn't have made cutoff, so they'd come in to resource because of the ability to ore sort out the waste. We could potentially have a lot more of our lateral ore that'd be profitable. So when we're mining our access along the veins, a lot more of that could be profitable. And there's also possibilities that we could mine using larger dimensions. So larger dimensions, larger equipment, more jumbo managed as opposed to jackleg managed mining. So we could mine a lot faster. So all of these things would accumulate to develop a cheaper mining cost. And I think one of the best certainly is being able to bring sub-ore material into the resource. Because as everyone's aware, Bralorne has some narrow veins. A lot of those we leave out of the resource because they don't make economic cutoff. So I think they're probably the major impacts that implementing an ore sorter would have for the project. If it works as well as these initial indications, it has a lot more impacts than just reducing tons, which I think is fantastic.
Okay, thank you. And then for the first part, you're not able to comment on the cost estimates, right? You kind of covered a few minutes ago.
We aren't at this stage. After it's come out in one of our quarterlies, I'm happy to talk about it.
Okay, got it. Thank you. And just touching on Ascot, can you comment on how you think the situation at Ascot Resources has impacted Talisker?
Sure. Look, I think I think we all probably admit it's had some sort of impact. Mining's had a pretty tough run in general here in Western Canada. Right back from Wolverine, Minto, Myra Falls on the island, Victoria, and now Ascot. Ascot, I guess people make some unfair associations between Talisker and Ascot. We're at similar phases going from development into production. We had Sprott as one of our funding partners. But to be frank, I think we're taking a very different approach to Ascot, and we have a very different deposit than Ascot. We don't have a very hungry mill that we've got a race to feed. General view is that the mill was overspec'd, and I think that was a lot of their challenges to keep ahead of development. Rushing development can rush dilution. When you fall behind, it's very difficult and expensive to catch up. So I think there are a lot of the challenges they had. Challenges with continuity of ore bodies, continuity of grade, things that we're not that concerned about at Bralorne. We know that our ore bodies are very continuous, historically up to a couple of kilometres. The ore shoots are very continuous again, up to sort of 1,500 metres, and the grade consistency that we see is very strong and very consistent. We're also not planning a great deal of production here. Our production profile that everyone may have seen in our corporate presentation is it's a nice steady ramp up. So we're figuring out what, we're not going to 750 tonnes a day tomorrow. We're starting at 100 tonnes a day and then going to 175 and then 350. So we're finding out the bugs and right sizing the rate right from the beginning. And the big thing is we just don't have to feed a hungry mill. We don't have to rush into that. So sure, when things don't go well, that it impacts on the projects around it. I think we've mitigated a lot of the challenges, and we're certainly taking a slower and steadier approach coming in, and a lower capex approach, and perhaps the tough markets and tough access to capital have been a benefit to us because we have to do things a lot more cautiously.
Okay, thank you. And Terry, just touching on a few more questions from a shareholder, are you aware of any impact of the tariffs on Talisker operations?
Oh, well, look, perhaps when I have a clear picture of what the tariffs actually are going to be, I can give you a better answer. Look, I'm sure there will be some impact, and I guess that comes back to the question on are we changing our economics based on the high gold price? I think there will be certainly some impacts here, certainly on steel that's required for ground support. There may be impacts on availability of materials, whether that be related to cementation, whether that be related again to ground support, or other things. I'm sure there will be an impact. Really, at this stage, it's very difficult to tell because it seems like it's changing on a daily basis as what the tariffs are, what rates there are. My expectation is that tariffs mightn't impact much, but there'll certainly be an inflationary increase relative to supply chain challenges. Either people rushing in to buy toilet paper like they did at COVID. In our case, it might be rebar for ground support or rock bolts or something like that, or simply supply chain for companies that are based in the United States and produce a lot of material. Fortunately for mining, there's a lot of material sourced out of Canada, directly sourced out of Australia or out of other locations. So there may be a few stumbles as we go forward that everyone will face, but I think in the longer term, things will work out well.
Okay, thank you. And turning to Canada, if the carbon tax is eliminated in Canada, would there be any impact on lowering the cost of operations?
It certainly would. Anything relative to transport in our scenario, and as we're looking at remote processing and hauling, it'd have a direct cost there on those transport costs, and also our underground haulage and operations, which are all diesel based at this stage. Outside of that, our energy is all hydro, so there's no real impact on that. But really, transportation would be the big thing that'd be impacted by any sort of reduction of the carbon tax.
Okay, thank you. And we just got a few more audience questions to cover, Terry. So touching on ore sorting again, given all the advantages. Oh, sorry.
Sorry, go ahead. Yeah.
So given all the advantages of ore sorting, kind of what's keeping you from going ahead and purchasing a machine like what?
Because we have to do the right scientific work first. And if we don't do the right scientific work, we're taking a significant risk. Well, I guess it's a $2 million risk to implement that scenario. So we just got to go through the next phase of work. The material that was processed at a small scale. So I think it was about 100 kilograms worth of material from various sites. It was from drill core. So we have to look at some run of mine and a larger scale of material to deal with variability. So we are in some discussions, having a look at, what are the timelines to procure ore sorting, what would be the design that we look at that we can do in parallel with this. But one of the main reasons that mining companies fail is because they don't do proper science. And at Talisker, we've always prided ourselves on that and maybe taken a longer approach. But really, it's not a lot of work to do and it won't take a long time. So I ask everybody to please be patient. But we'd rather do that work again. There can be variations between a preliminary study and a definitive study. So we'd rather just have the definitive study so we're certain that we are going to get those upgrades and we are going to get those recoveries and the grade increases, and then we're happy to go ahead. So I just want to make that clear. The study was preliminary, and we're going to do a proper study, a larger scale study, and look at what design and costing would this be, and then for sure we'd look at implementing it.
Got it. Thank you. And we just got one follow-up question. Do you have an estimate for the timeline for delivery from Europe for this ore sorter?
No, not at this stage.
Okay, thank you. And we have a question about TDG. Does Talisker still hold any shares of TDG Gold, which has had a nice run up lately? If so, how many?
No, unfortunately we don't. Let's hope they have a discovery there. They've been going at it for about 5 years, so almost as long as us, and haven't discovered anything yet. So let's hope they do. Unfortunately, yeah, they did have a good run, but we'd already exited out a while ago.
Okay, thank you. And Terry, do you see any changes in the market sentiment regarding valuation given toward the number of ounces in the ground? And when would you believe it might be beneficial to do drilling to increase the resource?
So I think our most significant re-rate potential is from production and cash coming in, not cash going out. I think that's the most significant re-rate we can get. Looking at multiples of exploration companies and developers, the valuations per ounce, EV per ounces, are very low across the entire industry. So I'd be very cautious at this stage about going and deploying a lot of capital into growing the resource. Obviously, it's important to replace what we deplete, what we mine. But at this stage, I think there's a lot more benefit that can be built through production than can be built through exploration. And I'm hoping that starts to change, and hopefully if there's a lot more M&A in the market, a lot more generalist capital coming in, a lot more generalist interest, that people with resources, with inferred resources, indicated resources will get much better EV per ounce valuations. But at this stage, everyone is being valued below what it costs them to drill it. So I don't think there's any benefit in raising or developing capital to add something that the market's going to pay you less than what it costs to achieve it in the first place. Hopefully that'll change.
Thank you, Terry. And just one last question as we wrap up. Are you able to give any details on the relationship with Nicola or New Gold? I believe it's asking about the, I believe this question is specifically asking about the toll milling agreements, but if there is any detail, but I believe you said if it's...
Sure. On the economic front, I can't really talk about it because it's contained by confidentiality with each of those groups. But I can talk about how the structure of things are. So with the agreement that we had with New Gold, it's an ore purchase agreement. So if we're delivering to there, they would purchase ore when we deliver it on site. With Nicola, they process that ore, and then a concentrate, gravity concentrate and a sulfide concentrate are then produced, and then that's on sold. With scenarios such as New Gold, then we wouldn't receive a concentrate. They'd commingle that with that, and once that gets smelted, then we'd get the remainder of what we were to be paid. And then other groups that we're talking to have similar scenarios, either a ore purchase and commingling, or a straight toll milling where we then sell the product out the other end.
Okay, got it. Thank you, Terry. I don't see any other questions. Oh, wait, we may have gotten a question. Is the project moving ahead with the tailings at Ladner?
Yes. We had some delays there. We need to do some geotechnical drilling on the dam wall before any activities can start. Install some piezometers or some seismic monitoring devices. We're looking at doing that towards the end of last year, but unfortunately the weather came in early, the snow came in early and covered the zone. There's also some access to be rehabilitated in that area. You'll recall a couple of years ago what was it called? The atmospheric flood that washed out the entire Coquihalla Highway also impacted on us. So we had some rehabilitation to do there. So we're looking at doing that work probably coming into June, July this year. Regeneration would look to do some drilling of the tailings material and then start to run their process testing on that.
Got it. Thank you, Terry. Was there anything else that you wanted to cover that we didn't get to cover today?
No, I think quite a lot of questions, which is great. A lot of interest in the ore sorting, but I think everything's. I think that's about it. Yeah.
All right. Well, thank you very much, Terry. Thank you very much to the audience. If anybody has any questions that we did not get to, please email info@adcab.ca and we will get to those. And with that, everybody, thank you for joining us and have a great afternoon. Thank you, Terry. Thank you to the audience. Take care.
Thanks.